Okay, it's July 31st, 6 minutes till market open. It's the last day of the month too. Considering that, I mean, like market structure looks great right now, but knowing what day of the month it is, price could honestly settle wherever it wants to. We could absolutely disregard all of our key levels that we have marked. But let's just assume we don't know what day of the month it is, and we want to determine our bias based off of the current market structure. Knowing that, let's just start on the 4 hour. I mean, on the 1 day, the only thing we have on the 1 day is still this massive bullish S&T divergence, and then this intermediate high right here. So we had this three candle fair value gap, this gap right here that this wick just barely entered. So this would be considered an intermediate high, especially since we didn't even fill like 10% of this gap. The minimum, I would say, for me to kind of not even put that much emphasis on an intermediate high is 50% plus, like 60%, because that's a pretty decent retracement. It's not very discount, but this is extremely premium. This is a very premium entry, so I think price could reject at this level. Whether we reach that level today, I don't know. Also, macro, from the start of this uptrend to when we started downtrending, this is the 50% and 61.8% range for Fibonacci. Now, price doesn't have to retrace into that range, and you could argue that a lot of times it will reject right before we even enter the 50% range, because the more you pull back down, the less bullish momentum you're going to have, right? So although this is an ideal level for price to retrace into, we know that price is no longer going to take out this low, because on the 4 hour, we have a massive 4 hour bullish candle that closed over this high. And that high, if we drop down to the 1 hour, you can see it clearly, that is our change of character. This was our most previous high before the uptrend right here. Very obvious previous high before the uptrend that we had this impulse move to the buy side, take out this candle, these two wicks with a candle body. So this is our official change of character. This is a very clear change of character. Now we know that market structure is bullish. And knowing that makes it a lot easier to determine which high time frame confluences are currently trading, which ones are impactful. And what I mean by that is right now we're in a 4 hour bearish gap. So this is the fair value gap resting right below that 1 day intermediate high. And above that 1 day intermediate high, we have a 4 hour gap as well. But if we're looking at this gap right here, price is currently in it. Now, a 4 hour fair value gap on the buy side is just as influential as a 4 hour fair value gap on the sell side. It doesn't matter necessarily how big the gap is, but knowing that market structure has shifted to bullish, we can put more emphasis on taking a trade when price enters a bullish confluence. And what I mean by that is this is a 4 hour gap, but also so is this one right here. We have a 4 hour gap right here. We also have a 4 hour gap right here and a 4 hour bullish order block. So it's very simple. What I want price to do is right now we're accumulating price, and you can kind of see that clearly on the 15-minute with this consolidation. What I want price to do is manipulate sell side and then distribute buy side. Very simple. I think it's a good idea to enter in either this 4 hour gap or this 4 hour gap right here. Which one is honestly based on the gap that gives us our confirmation, meaning the gap that provides a low time frame inverse of a bearish fair value gap. Because market structure is bullish, we want a low time frame to invert, absolutely disregard, invalidate a low time frame fair value gap in the opposite direction, which is bearish. So if we invert, like, let's say a 3-minute, 2-minute, 5-minute bearish fair value gap, that would be confirmation. The second we invert it with a candle body close above the second candle in the fair value gap sequence, that is when we enter long. That is our confirmation. And it's substantiated by us being in a high time frame key level, us manipulating sell side, and then, of course, the daily bias, which is bullish. Now, in terms of when to take profit, I'd be comfortable taking it before this intermediate high up here, before the most recent high that was created before price reversed from the downtrend. We'll know when to take profit once we see it. We might just go for a 1-to-1 ratio. 1-to-1 would mean take profit at 500. 2-to-1 could mean take profit at 500 but stop loss at 250, or we can go for take profit at 1,000, stop loss at 500. So that will kind of get a better idea of once price actually reaches that level. But I really quick want to determine, just get an idea of what level price will retrace into, whether it's this one or this one. And this is considering that we don't just take off from right here and enter this 4-hour gap and just keep pushing. That's considering that, because it's very possible that we disregard a high time frame key level, like anything on the 1 hour or 4 hour, and instead we look for a 15-minute smaller gap that we're going to create right here, right? It's very possible that we retrace into this inverse fair value gap right here. You see what I'm saying? Like, this is also somewhat of a key level that price might want to retrace into. And again, market just opened, so we just inversed this bearish fair value gap. We have a 15-minute gap right here, 15-minute inverse fair value gap right there. So it honestly depends. The way we know if we are going to trade off of this medium time frame gap rather than a 4-hour and 1 hour is we need more confirmation, right? Because ideally, if you see a 4-hour gap here and 1 hour gaps, that is kind of what you want to wait for price to manipulate into. It's not as influential for price to manipulate into a 15-minute gap or a 30-minute gap or a 5-minute gap, obviously, since it's a lower time frame. So the way to confirm when price is kind of bouncing around in that medium time frame area is you look at ES, the correlating pair, and you check for an SMT divergence. And let's say that ES did not take out this London low right here, and we had a bullish SMT divergence, then I would consider it. I would be like, okay, this was considered our pre-market manipulation to this sell-side liquidity right here being London lows. And Q took out the low, ES didn't, and then we inverted this 15-minute, 30-minute bearish fair value gap. Honestly, I don't mind taking that trade, right? We could leverage high and then have less points. So we could trade like 5 micros and it only be like a 40-point move. But that was an example. ES is in sync with NQ right now. Actually, maybe not. Yeah, actually, maybe not, because ES took out this low right here. Yeah. ES ended up taking out this Thursday 10 p.m. low while NQ didn't. So it's a possibility that, you know, might just be taking longs immediately. This was the inverse fair value gap break. This was the candle body close. Honestly, price retraces into this at this level, I could consider sizing very low and just entering. But if we don't, then this is a very early pre-market move that it's possible we just missed, right? And that can happen, especially when you're so focused on, or I'm so focused on, the high time frames. And the reason being is because the higher time frame rejection just makes your trade likelihood of carrying out a lot higher. And I like high probability, like on a weekend, 90%, 100% win rate. Like that's what I want to target, right? If you do like the market open moves on a medium to low time frame, you can still profit, but it's just not as likely because you have higher time frame factors contradicting it. So that's the only thing. Yeah. What kind of gives me a little confidence is that I predict that at 10 a.m., one of the pairs, whether it's NQ or ES, will take out this intermediate high up here, this 5 a.m. high from Monday, July 27th, while the other one will have not. Or it will be in relation to London highs right here, and Q will have taken out London highs while ES has not. And that will create a bearish SMT divergence that is not going to change market structure because we know the market structure is bullish, our daily bias is bullish, but it will allow price to find an equilibrium, rebalance, and temporarily retrace into a key level for where we can take entries. We can take our retracement entries. So we'd have to wait for that. Right now, ES has not taken out this London high, so no, that's something. That's for sure something. But yeah, price just took off at market open. I think that is what happened once we had this candle body right there close. Yeah, price was just very bullish, very. But it's in general, even if you see confirmation, two things. There were factors that moved price which happened in pre-market, and pre-market factors aren't as influential as things that arise at market open. I'm saying like gaps and key levels and displacements. When it happens at market open, that's higher liquidity. There's more confirmation there. But in pre-market, it's not as impactful. Even though I understand like it's 9 a.m. still, but it's just not as impactful. And then to enter a trade at 9:30 a.m. on the dot, I don't believe that is a great idea, because all the retail traders are at that are in play right there. Like price could manipulate position in a matter of 5 seconds. So we're just gonna have to be a little patient on this one. Hopefully price kind of retraces into a 5-minute gap, maybe a 15-minute gap, maybe down here, who knows. I think that there's a decent chance that we treat this London high as a breaker block and we reverse from there. But then again, I just don't know. I just don't know. Like if we hold a very high time frame S&T, like on a 1 hour, I think that there's a chance we can expect price to do something like this. Take out all of the sell side liquidity, enter that 4-hour gap, and then there still be time for price to continue in the dominant trend direction. I think that it's a possibility. I've seen it happen, but the only point of contention is like it might get too close to 11:30 a.m., 12 p.m., where now we're talking afternoon chop, low liquidity, and if we retrace into this high time frame level at like 11:30, I'm not sure I want to be in a long position on this reversal leg up, because by then like time has kind of fizzled out. But let's say we get here by like 10:30, then I can consider it, right? Otherwise not. Yeah, so I like what I'm seeing here in that NQ is taking out London highs. So NQ has taken out London highs while ES has. This is a very easy way for you to know, or like to confirm to yourself that, okay, we're going to find a retracement entry. Price is going to retrace, and it's going to be a bullish trade. It's going to be a long trade. What is our market structure, and what is our daily bias? We know it's bullish. We had the change of character. We had price retrace into that 50% range on the 1-day time frame, and we had an impulse move up, and that's really all you need to know to determine your daily bias. We're respecting bullish confluence more than we are respecting bearish. Now, when you see an S&T divergence on like a middle time frame, like 5-minute, 15-minute, you know that price is going to want to retrace. And this S&T divergence was created by a manipulation. Now, market will do this every morning. It will accumulate, it'll manipulate, and then it'll distribute. Accumulation can happen in pre-market up until like 10 a.m. I've seen it happen till 10 a.m. Price accumulate and then manipulate. This was our accumulation right here in pre-market. We manipulated the buy side. Now, distribution, the final step, the final stage, can happen in the same direction that price manipulated or the opposite. Now, if price manipulated buy side, would distribution occur sell side? If I'm saying like it could be either, but the reason why I can't distribute sell side is because distribution is where price is going to move for the rest of the day and most likely settle. If we know our bias is bullish, if we know we're looking for longs, then our distribution can't be bearish. It can't distribute sell side. It is going to distribute buy side. And if we see a manipulation buy side, then we know in this special case, price has manipulated buy side and we will distribute buy side. How can we distribute buy side after price is manipulated buy side already. We're going to retrace. We're going to temporarily retrace into a key level where we can enter positions and then continue in the dominant trend direction. That is what is happening right now with this temporary pullback. So I'm just going to mark this S&T. And I like this. Okay. Question of like where exactly we will retrace into. Regardless of this, at some point, whether it's at this inverse fair value gap, this 15-minute gap right here, whether it's in this 30-minute inverse fair value gap, whether it's in any of these 5-minute gaps right here, wherever we reverse, could even be down here if we want to manipulate all the way down here. And even if we come down here, I'd still be okay with taking longs because, I mean, even more so, we're in a 4-hour gap now. Whatever the case may be, I'm going to need confirmation. And because we're respecting like 15-minute, 5-minute, 30-minute gaps, and that is kind of the impulse leg to the buy side that we had at market open, like that is what caused it, those middle time frames, I'd be okay with my inverse fair value gap, like price inversing and confirming to us by inversing a bearish fair value gap. I'd be okay with that happening on even a 30-second or a 1-minute time frame because I'm understanding now that the market is high liquidity. Let's say if we were respecting a 4-hour gap more, 1-hour gap, then I'd look for, then I don't know if I'd put that much emphasis on a 30-second or 1-minute inverse for my confirmation to enter a trade. But since I'm seeing us respect 5-minute, 15-minute, 30-minute, I'm more inclined to trust the lower time frames because I understand that this is a high intensity, high liquidity environment that I'm trading in for today. And it being the end of the month is just making it even more so. So look, exactly, we're rejecting off of that 5-minute gap right there, which is also that inverse fair value gap on the 30-second. And now I just want us, or sorry, on the 30-minute. And now I just want us to inverse a low time frame gap. And I just want to determine my my risk. Now this is where I determine my risk, where I feel like price is starting to reject. What is my risk? I would probably make my stop loss probably make it like the bottom of this second candle right here in that gap. That's 111 points. Assuming that I enter right here, and this is my stop loss. 111 times 2 is about 220, and then 500 divided by 220, it's a little over 2. So what I can do is start with 2 micros, and then if we temporarily pull back, I can add a position, and then at 3 micros total from where our limit is, we'll most likely have a 500 stop loss and take profit set, $500 risk. So I'm just kind of waiting for us to reverse. Now, of course, even though I said like we're respecting 5-minute, 15-minute, 30-minute time frames, I'm okay with looking for a 30-second inverse fair value gap and a 1-minute inverse fair value gap. That is true, but that doesn't mean I disregard 2-minute and 3-minute and 5-minute. Like if the 1-minute is showing me a bearish fair value gap that I can possibly invert because price is now rejecting, that doesn't mean that I disregard the slightly bigger 5-minute gap or 3-minute gap, right? Because those still stand. My point is that if the 5-minute, 3-minute, and 2-minute are not showing bearish fair value gaps, but the 1-minute and 30-second is, and we successfully invert it very clearly, then I would take that trade. I would take that trade. I like this. We've entered that 2-minute nice bearish fair value gap. Sorry, bullish fair value gap. But at the rate we're kind of tanking, I don't know. Don't know how I feel about that. Yeah, okay. So looks like we're just gonna, yeah. Whoa. Okay. Still an SMT, still a bullish SMT in relation to where NQ is right now. ES is down here. ES is down here. So yeah, I mean, we're about to have a 1-hour bearish SMT divergence. So that's pretty high. A 1 hour bearish S&P divergence is plenty for price to retrace like another, how many points is that? 200 points, and then continue in the dominant trend direction. And I'm pretty confident that we're taking longs today. And even if price starts tanking down here and it's 11:30 a.m., fine. Maybe we want a deeper pullback, and then this is setting us up for Monday, August, right? We have to remember that it's the end of the month and it's a Friday. So as much as our daily bias and our conviction is bullish, that doesn't mean that Friday, the end of the month, has to settle bullish, right? We might want to prepare for the rest of the month and pull back. So I think that's possible, especially with a 1 hour candle like that. I would not like to take longs seeing a massive wick bearish candle like that, but we might have to. So we'll just be prepared for that. Yeah, so we've disregarded this entire structure right there. Yeah, so I don't see anything yet. I'll resume once I kind of get a better picture. Okay, so we have a rejection off of this 4 hour gap right here. Also, that's a 15-minute intermediate and a 30-minute, so I like that. Now I'm just looking for confirmation. Daily looking to invert a low time frame fair value gap. I don't see anything on the 30-second. On the 1 minute, I don't see anything. 2 minute, nothing. 3 minute, nothing. 5 minute, we have this one right here. So if I get a candle body close above this, I'd be comfortable taking longs and probably sizing at 130 times 2 is 260. Yeah, so I'd do 2 micros for that right there. If we end up inverting this level in the next 2 minutes. I think there's a decent chance, especially where price is currently at, but we could break it and then candle body close below, which is not what we want. We want candle body closing above. But I like this a lot. We had a bearish SMT on the 1 hour, or about to. So high time frame bearish SMT divergence, price retracing into a 4 hour gap right here. And then of course we have this one right here. We have this gap. And believe we have a bullish SMT divergence as well. Don't need one, but July 30th, 6 p.m. We've taken out that low on ES, and we've taken it out on NQ as well. So yeah, no need for a bullish SMT there, especially since we had a bearish one and then price retrace into this 4 hour gap, which also ends up being a 30-minute intermediate right here, and a small 1 hour gap, but a very clear 4 hour one, wicking right off of it. So I do like that. I do like that. I am going to need to see us invert this 5 minute right here. Clear 5 minute bearish fair value gap. Candle 1, candle 2, candle 3, and then this is the gap that I want our candle body closing above. Still have a minute 20, so I'll resume once that candle finishes. Okay, so clear dump, right? Today, bearish price action. Makes sense, I guess. End of the month, Friday. Price kind of wants to settle into this 50% equilibrium right here before we continue bullish the rest of August, maybe, hopefully. But I guess the retracement entry was this right here. We had a wick reject off of this 4 hour, and I was kind of married to that conviction that this bullish candle right here would close above this one and create a 5 minute inverse. But it's important to realize, like, when you see a bearish gap that you're waiting for a candle to inverse, if we don't inverse it, don't forget that we rejected off of it. and we're continuing bearish. Like, don't forget that we're respecting it. Obviously, if you're not invalidating it, you're respecting it. And once we respected it, we had this 1 minute bullish fair value gap here that we inverted with this candle right here. So I guess that this was the trade to take right here. Yeah, this was the trade to take. Even targeting like a 1-to-1 ratio right there. Even if you targeted a 2-to-1, you would have been good. And then potentially a 3-to-1. Yeah, 3-to-1 as well. So just keep that in mind. It'll kind of happen very fast. And exactly like I mentioned, we're respecting a lot of medium time frame confluences. So a 1 minute gap is sufficient for us to invert. But yeah, that's the trading day. I'm okay with preserving capital on a Friday, with it being the end of the month. And I think it'll nicely set us up for August.